Hey everybody, welcome back to Investing with Wesley. With all the hype over the service apps like Airbnb and DoorDash, I want to explain to you exactly what an IPO is and whether or not you should invest in them. Let's get into it. Now, first off, what is an IPO? An IPO stands for Initial Public Offering, and this is when a private company decides to go public and offer the public investors their initial offering of stocks that people can invest in. This is important to understand because as more and more people start going to places like Robinhood and other trading platforms, people lose sight of exactly what an IPO is. An IPO is when the company itself is selling people its stocks to raise working capital. If you trade Google or Amazon on Robinhood or Webull or any of the hundreds of thousands of investing apps out there, you're not necessarily giving or taking away money from that company. You're trading over the counter between other investors. But an initial public offering is you're actually buying a piece of the company directly from that company. So when a company offers more shares of their stock, they're the ones actually receiving direct compensation for it. So it makes sense that during an IPO, a company would wait until a strategic time frame. That way there is a lot of demand so they get the best bang for their buck. I want to expand further on that idea. IPOs are strategically done to raise as much capital as possible for that business. Oftentimes people fall for the marketing and hype of IPOs when if you look at the financials of that particular company, it's not really worth the investment. But you'll have IPOs almost doubling their initial offering price in a matter of hours just because there's so much demand to get in. Even though if you look at the prospectus, which every company has to send out to people in the event that they go public with an IPO. If you look at the prospectus, not every company is a winner and not every company deserves to be invested in. Now, although yes, there is a strategy that companies use to get as much money from investors as possible, there's rules and regulations set in place to prevent them from doing this maliciously. In order for a private company to go public and offer their stocks on the stock exchanges, they have to go through a rigorous process with the Securities Exchange Commission, that's the SEC, as well as every single exchange that they want to be able to be traded on. So that means they'd have to go through processing and follow all the regulations of the SEC, the NASDAQ, the New York Stock Exchange, and any other stock exchange that they want their stock to be able to be traded on. Now the real question is, should you invest in IPOs? And honestly, with everything that comes to investment, the answer is it depends. But what does it depend on? Well, it depends on what your goals are and why you're investing. As an example, if you're a buy and hold kind of investor, your strategy is going to be wildly different from a day trader. A perfect example would be the Airbnb public offering that just went online a couple days ago. If you were a day trader, you could have bought a bunch of shares at the asking price of the IPO, and then within a couple hours sold it for triple of what you bought it for, thus securing a nice profit if you were a day trader. But if you were a buy and hold investor, I'm not 100% convinced that you should really invest in Airbnb this soon. Yes, the prospectus looks nice, but at the end of the day, it's also marketing material designed to encourage you to buy. And although Airbnb is worldwide, so they have the potential to make a lot of money, because of the coronavirus and all the uncertainty that goes on with the travel industry, I'm just not sure how soon Airbnb will be able to be a profitable company. Now, don't let my opinion discourage you because even myself did invest in Airbnb. But I bought it purely out of speculation to see what it would do in the future. I placed no large bets on this company whatsoever. I just put a little bit of money here just to see what it does over time. And if I like the trajectory that Airbnb grows into, then of course I might invest some more. But for now, this is a pure speculation kind of stock. Because there is just not enough evidence, in my opinion, to invest a large sum of money long term. Now, like everything, there's a dichotomy. What if Airbnb or DoorDash is the next Amazon or Tesla or Google? We cannot predict the future. And if you were a buy and hold investor that bought Apple or Amazon right when their initial IPO was, and even if you only bought one stock, the gain you would have on that one stock if you bought it during their IPO would be absolutely amazing. So that is one of the big benefits of buying an IPO and holding long term. If you read the IPO prospectus, which includes a summary of the company's background and financial profile, the prospectus will also tell you what kind of security the company is offering. Whether it's common stock, convertible stock, bonds, you name it, the prospectus will tell you exactly what you can buy and what's for sale during this IPO, as well as tell you what kind of banks and hedge funds are backing this IPO, as well as doing the underwriting for it to create the fair market value of the stocks being offered in the IPO. So if you were a public investor and read the prospectuses of these individual IPOs and you were convinced that they were going to go up long term and make a killing for the investors, then by all means you should invest right now, because although the stock may go down and you might not necessarily get it for the lowest price ever, it is definitely safe to say that you'll be able to hold it for the longest if you do invest during the IPO phase. If you invest right when the start of everything goes public and hold it 5, 10, 15 years into the future when they are a large established company, you could get lucky and end up with the next Amazon or Apple. But at the end of the day, I really just beg you guys to really pay attention on the fundamentals and the finances that come with investing. Don't just invest over the hype or what the trends are telling you to invest in. Look at the company's financials. Look at the prospectus if it's an IPO, or look at the last couple K1 reports if it's an established company. Figure out if they're making a profit, if not, why they're not making a profit, and where they plan to go into the future. All this can be done with a little bit of effort and time and research on your behalf. And this could save you from so much losses in the future by buying the hype and not pulling out in time. So with that being said, guys, I hope you now know what an IPO is and what to do on the next IPO, and some things to think about whether or not you should or should not invest with them, and if it matches your investment strategy or not. If you got value from this video today, please remember to like and subscribe and tell your friends about it so we can keep this channel growing. But until our next video, have a good one.